Thank
All
you.
right, let's head over to London and check in with our man, Tom Belger. Tom, I've been watching this back and forth all morning long with regards to the EU stimulus plan. Is there a plan yet, and where do things stand?
Well, it's looking a lot more promising than it was last week, for sure. Several leaders say there has been progress towards this joint EU stimulus that will be funded through joint borrowing for the first time for the EU. The German Chancellor, Angela Merkel, she's saying a framework for a possible agreement has been reached. That's not quite a deal, but she's hopeful of one today. So that's taken the euro to near 4-month highs. Today, similar to last week, Italian bond yields also near 4-month lows. But European stocks are more mixed because there are still big divisions, particularly on how the $858 billion stimulus package will be divided between grants and loans. The French president, Emmanuel Macron, apparently slammed his fist during these discussions, but diplomats are hoping for a compromise somewhere between the amounts demanded in grants between France and Germany on the one hand, and a group of so-called frugal northern countries on the other. So talks are paused for now, but they will start again in about an hour's time. Brian.
Get that guy some bandages, Tom. We were joking around a little bit in the Slack channel. JP Morgan coming out this morning saying now might be a good time to buy UK stocks, which have really underperformed. But you got a survey out this morning saying the UK might cut more jobs, so it's hard to square those two.
Yeah, well, the UK's manufacturing sector is really struggling. We're seeing from these stats some jaw-dropping figures showing whereas a couple of months ago they had 1 in 4 firms planning job cuts, now it's more than 1 in 2. So it's a pretty significant wave of redundancies looming there. Firms like Rolls-Royce, Bentley have already axed jobs. On the face of it, though, it's odd that you'd see that number rising now, given that economies are opening up. Seems to be opening up at pace in the UK. But really, there's only so long that a lot of firms can cope with that heavily subdued demand, heavily constrained production, given social distancing. And just 15% of firms in this survey say they're now at full capacity. It's also worth saying, lastly, you've got Brexit at the end of the Brexit transition period on the horizon, potential big cliff edge there for a lot of manufacturing firms. And maybe that's one of the big things to worry about with the UK economy more widely. Brian.
For sure. All right, Tom Belger, thanks so much.